You won't believe it, but the cost of your morning coffee just went up. Why? Because of a trade war between two of the closest allies in the world, the United States and Canada. But the real story is yet to come, and trust me, you won't want to miss this. In 2025, President Donald Trump, after returning to office, reignited trade tensions with Canada by imposing new tariffs on steel, aluminum, and agricultural goods. Citing unfair trade practices, Trump's administration introduced duties on Canadian dairy and lumber exports, causing immediate backlash. Canada, unwilling to be pressured, retaliated swiftly. Prime Minister Justin Trudeau responded with countermeasures, placing tariffs on U.S. exports including automobiles, farm products, and consumer goods. The dispute quickly escalated, bringing back fears of a prolonged trade war similar to the 2018 to 2019 period. Unlike before, this time the stakes were even higher. With inflationary pressures already affecting both economies and supply chains still recovering from past disruptions, the effects of this trade war were felt much more rapidly and intensely. The conflict also extended beyond just goods. Investment flows between the two nations slowed as businesses grew cautious of uncertainty. Stock markets responded with volatility, reflecting investor fears over prolonged trade instability. Trade wars hit real people first. Sarah, an auto parts factory worker in Windsor, Ontario, now faces layoffs as the U.S. tariffs make Canadian vehicle components more expensive. Auto manufacturers, struggling with higher costs, begin relocating jobs and slowing production. On the other side of the border, Jake, a construction business owner in Michigan, sees his material costs skyrocket. Canadian lumber, a crucial part of the U.S. housing industry, is now subject to increased duties, making home building more expensive. Home buyers in America feel the squeeze as housing prices climb even higher. Farmers are hit especially hard. American soybean and corn growers lose a vital market as Canada shifts its agricultural imports to Europe and Asia. Canadian dairy farmers, who already faced pressure from previous trade disputes, now see their exports further restricted, forcing some to shut down operations altogether. Grocery stores also see increased costs for everyday goods. Everything from fresh produce to packaged foods carries a higher price tag due to new tariffs, pushing inflation higher. Families across North America are now forced to rethink their spending habits. The numbers tell a troubling story. The US and Canada share over $700 billion in annual trade, making each other top trading partners. But with rising tariffs, disruptions become inevitable. Supply chains slow down, prices rise, and industries suffer losses on both sides of the border. Economic analysts predict that these trade barriers could lead to consumer price increases of 5 to 8%. Further straining families already dealing with economic challenges. The U.S. construction and auto industries, both reliant on Canadian materials, see significant cost escalations. Layoffs become more frequent as companies struggle to manage higher expenses. Experts warn that up to 200,000 jobs across both nations could be at risk if the trade war continues. Additionally, businesses that rely on just-in-time manufacturing find themselves struggling with delays and shortages. Shipping times increase, and companies begin seeking alternative suppliers, which adds more instability to the market. While the U.S. doubles down on its protectionist stance, Canada accelerates its trade diversification strategy. Trudeau's government strengthens partnerships with Europe and Asia through the Comprehensive and Progressive Agreement for Trans-Pacific Partnership and the European Union's Trade Pact, ensuring alternative markets for Canadian goods. China, seeing an opportunity, begins deepening economic ties with Canada, increasing its imports of Canadian resources and agricultural products. This shift raises concerns in Washington about Canada reducing its dependence on U.S. trade, potentially reshaping North American economic dynamics for years to come. The U.S. faces internal divisions as well. Midwestern states, reliant on Canadian exports, push back against Trump's aggressive tariffs. Business groups and industry leaders urge the administration to negotiate rather than escalate, fearing long-term economic damage. The world watches as negotiations unfold. Canada challenges U.S. tariffs, claiming they violate trade agreements, while American businesses push Congress to ease tensions. The Trump administration, facing political pressure, signals willingness to talk but sticks to its America First stance. Meanwhile, Trudeau seeks global support to reduce dependence on U.S. trade. Stock markets remain unstable, and with elections nearing, leaders must act fast. The big question: will logic win, or will politics drag this on? One thing is clear: people and businesses will suffer the most. If history has taught us anything, it's that economies are built on partnerships, not walls. As the world watches, one thing is clear: our wallets, our jobs, and our futures hang in the balance. But the question remains, who truly wins in a trade war? Let us know your thoughts in the comments below. Subscribe for more deep dives into global events.